Good morning, UPBOptionMillionaires.com. April 14, 2014. It's a Monday. Hope you had a great weekend. And this is a holiday shortened trading week. We only have 4 trading days. The market is closed on Good Friday. Of course, it's any Friday is good when you don't have to go to work. We have earnings reports coming out, really starting to heat up. We have Google, Chipotle Mexican Grill, Goldman Sachs, BlackRock, Morgan Stanley, Pepsi, Coca-Cola, Johnson & Johnson, Intel, Yahoo, American Express, Capital One. We have SanDisk, Citigroup. Before the bell this morning, it's actually in a little bit here. But anyway, this is a chart I've been bringing up. This is the S&P 500 ETF, the spiders. And I was talking about this possible forming of a longer-term head and shoulders pattern, which would imply possible top of this massive quantitative easing scheme that has inflated asset prices since the lows in March 6, 2009. And you can see the move up we've had recently. You can see this trend line here. This trend line represents, this is actually what I'd like to call the Abe Shinzo low, because stocks were pulling back into November of 2012 when the Japanese said, hey, we're going to print just like the Federal Reserve. And so this trend line here represents that low in November 2012. We got a couple points of interest along the way. So to me, this long-term rally's got 2 possible outcomes. The one outcome is we come down to this trend line here, and we continue on our merry way up to SPY 190, 195, and then 200, and then beyond. The other alternative outcome is, if you look from a longer-term perspective, and I've been bringing this up for quite a while here, the fact that we could be putting in some sort of top here, a head and shoulders pattern with the left shoulder. And obviously this is way too soon to be calling this, but I'm just putting it out there. We come back down to this 172, 173 level, which would complete the head down to the shoulder level. And then we get a right shoulder, which would be over here. And this is going to take months to complete, so don't think it's going to happen tomorrow. And then ultimately declining down. Possibly you would look at this level here at the 165 level, and then down to the 157, 158 level on the SPY. So yeah, pretty dramatic decline. That'd be heading into the end of 2014, start of 2015. And actually that would kind of coincide with the quantitative easing, the Federal Reserve winding down its assets purchase program. Of course, interest rates still remain at the December 2008 abnormally low levels. I mean, absent charging people to, save their money, we're at historic low interest rates. So we'll see if that comes to fruition or if we bounce off this level as we have in the past. And you can even go back every single dip, and I talk about this ad nauseum. Every single dip has been a great buying opportunity. And I liken each of the dips to, the bear's trying to drown a beach ball in a swimming pool. And each time the ball just bounces higher and higher. So is this another dip that's going to launch us up? If you look from a historical over the last 5 years, since the March 2009 lows, yeah, I mean, the trend has been your friend. So any kind of dip has been a great buying opportunity. So I just figured I'd bring up the longer term perspective. We're going to go over some stocks here. I just also talk about the recent sell-off. They call it the tech wreck. There's a piece in Barron's talking about it, the tech wreck. Yeah, and a lot of the technology stocks have been beaten down. But if you look at it, let's look at some stocks over the course of the year. Everybody's talking about this massive pullback. WWE has been getting clobbered, right? I know it's not a tech stock, but, investors are wrestling with taking profits here after this enormous run. But look at this pullback here. WWE is still up 132% over the last 52 weeks. Facebook's been in a little bit of a tailspin. Look at us. Guess what? Up 120% still. Still, after the big sell-off. Priceline. Oh yeah, we're pulling back. Guess what? Still up 65%. Even Twitter, which IPO'd at prices that are still lower than this, up 16% over the last 52 weeks. Workday up 20% after this kind of pullback. Still up 20%. Anybody who bought Workday over the last 52 weeks ago. We have SSYS up 27% over the last 52 weeks. Yahoo up 37%. Look at that Reddit support. Love this. They have earnings this week. Baidu up 69% over the last 52 weeks. even in spite of this pullback from the all-time highs on Baidu. We can go to Pandora, still up 181% in spite of this. This trend line will come back a little bit. In spite of this nasty pullback. Nasty! And how about Zillow? Zillow is still up 68% over the last 52 weeks. So I see, to me, this is, you'd like to see this. Taking some of the froth. I like to say froth. I like that word. Honey, could you make me some froth tonight? Because there's plenty of it going around after it's been taken out of the market. So yeah, it's taking, some of the bubble-like, and Barron's talked about it again this weekend in their magazine, as they did back in November 2013 and July of 2011. July of 2011, Barron's came out and said, "Oh, we're in a bubble." Yeah, and 3 years later, here we are again. We're back in a bubble, seemingly though at much higher prices. So let's look at some earnings trades. We have an earnings report tomorrow from Johnson & Johnson. I know it's a dull, boring stock, but a similar chart to what we saw with JP Morgan Chase. Look at JP Morgan Chase. You see the channel. Look what happened once we hit the top of this channel. Same thing with Johnson & Johnson. Looking for a pullback. The only unfortunate thing, I'm looking to get into some puts, is an analyst came out this morning downgrading the stock, although keeping a $103 price target, something like that. But if we do get a bounce and we hold up today and maybe come back into positive territory, I'll be looking for some puts. Some puts. I like Yahoo. I brought that chart up a little bit ago. I like Yahoo for a bounce. Maybe a decidedly big bounce back over this $35 level. The $35 calls are pretty cheap right now, so don't tell your friends. And then we have Visa. I like Visa for a move higher here. I mean, look at the collapse, though. Underneath this long-term, this is the Abe Shinzo trend line down to the 196 level. So yeah, you would think maybe breaking that trend line, we could be in the midst of a bigger move back down to lower levels. I'm thinking a short-term bounce at least over the next week or two and get us back over the $200 level. Guess what? Visa's options aren't really priced too crazy. So meaning you can get some call options for a trade for upside. It's not going to cost you too much. So I like Visa. Also, MasterCard's put at $68. I mean, yeah, the chart does look decidedly weak. Pull back. Consolidate, pull back, or flag, bear flag. So I'm looking for at least some sort of a consolidation or a flag before a possible move lower. But we could indeed get some sort of a reversal here. And that's what I'd be trading for MasterCard, Visa. Microsoft downgraded today, but still maintained a $42 price target. This stock really hasn't broken down much, and really seeing a lot of money flow from those tech wreck names, the tech wreck of 2014. Get your tickets now. Blood is on the streets. That was another headline from this weekend. The blood in the tech sector. What one is going to, I don't know. It is. You got to love it because it's just like, CNBC, hey, they got to do headlines. The headlines got to be big and bold. So anyway, Microsoft. Actually, the chart doesn't look so bad here to me, but probably not getting into the calls. We had Charles Schwab. Somebody brought it up in the Week Ahead webinar last night. We have earnings coming out to an interesting juncture here, and an analyst just upgraded the stock this morning. Were they the buyer of the far out of the money calls that would reap massive profits if the stock rallies? Tune in next time on, I don't know. I can't think of a good name for the show, but we have NQ. Muddy Waters out with another scathing report as it dropped 20%. Look at this. I mean, this is volatility. This is volatility. Look for the support again here at the $8 level. Of course, the options are going to be out of this world. So you might want to just watch or go short the stock if there's any shares left. HLF, this one looks a toaster. Down at about $45 level. Late in the session on Friday, FBI announced, or not announced, no, a secret person within the FBI came out and said, oh, I'm not supposed to tell anyone, but there's an investigation going on, and it might get hairy. So you can look from a chart perspective, looking at the $45 level as the next area. And even if you just look at this chart, somewhat of a topping pattern here. Broke down, we bounced perfectly up the support, which had been a support previously to resistance, which is great. That's why you draw the trend lines, draw them up. I'm not much of an artist, but I can draw a trend line, especially with the fabulous tools provided by the Thinkorswim platform by TD Ameritrade. Sign up now and get 50 trades free. There you go. See, that's my shameless plug. I don't get paid anything for that, but they have a great platform, and I'd love to see everybody use it, because the more everyone uses it, the more technology people that they can hire to make it even better. So we're looking for a pullback here to the $45 level, and then the plunge. Let me see if I can find it on my chart here for each of them. I don't see the zero. I don't see it. Bill Ackman, see if you can get TD Ameritrade to put a zero down here, because that's where the chart's headed, right? Zero. All right. I've already overdone my welcome here. It's a long market video. I also did a live webinar last night at optionmillionaires.com. Went over a lot of earnings trade. We have Citigroup this morning. We have Google, Chipotle Mexican Grill, SanDisk, BlackRock, Goldman Sachs, General Electric, Pepsi, Coca-Cola, Johnson & Johnson. Anyway, I'll go over those more as the week progresses. It's a short trading week. It'll be a lot of fun, and hopefully a lot more fun for me. I was in some put positions last week. Call, excuse me. No, not the puts. No. And so anyway. All right, UPB, optionmillionaires.com. Everyone have a great trading session, great trading week. I'll see you in the chat room at optionmillionaires.com, and I'll let you know if we get into any of these trades. Goodbye.